Good morning, YouTube. 9 to 5 Markets back with another video for you guys. So in this video we're going to be talking about a few things, which includes dividends and one of our plays as well, which is in the buying opportunity, and I will definitely be loading up on it as well, and along with how much money do you need to start in the stock market. So I've been getting this question frequently by many of my friends, family members. So I'm just going to quickly break it down. You do not need a lot of money to start in the stock market. Reason being, let's say you have debts, other liabilities and everything like that. That should be your main motive, to pay those off first, okay? You don't want to throw in, maybe let's say you need $2,000 or $2,000 in the next 2 months. You do not want to invest that money into the stock market. The biggest reason why is because you're gonna have an emotional attachment to that money. You need that money back essentially in 2 months, and you're putting it into the stock market. So your emotions will be a huge factor in the sense, let's say you buy a stock, the stock tanks, and you're gonna panic sell, or it's just too many emotions involved, and you do not want to trade like that. Only put in money that you don't care about essentially at this point, right? So put in money that you're willing to lose and don't care, because in the beginning it is a learning lesson, and you do not want to risk, let's say it's your first time trading, you're going to put in $30,000. Definitely not worth it, and I would not do that. Reason being is traders tend to overtrade a lot, and we tend to blow our accounts in the beginning for sure. And without a doubt, I'll even say that I blew a few accounts as well. But you have to practice and learn the basics. All right, I can't preach that enough. The basics are so important, and risk management. Without those two things, you're definitely not going to do well in the stock market, because you're going to play with emotions and have no risk tolerance or management, which will alternatively blow your accounts time over and over and over. So just make sure that you're playing with money that has no, you don't need the money basically. All right, so when you put in the stock market, if you lose it, you're okay with it. All right, family. So now we're going to talk about what are dividends, how do they work, and how to create a portfolio with dividends. Okay, so dividends is basically a stable company that pays you out their profits essentially. I want to make it very simple. I'm not going to make it complex. So we'll take just the one example. What's a stable company in the energy sector right now that everybody probably knows about? Enbridge. All right, so that's my favorite dividend stock out there, and I love that stock. Reason being, it pays a very high dividends each year, and it's been growing, so each year is kind of increasing slightly. For example, 2020, the dividend payout per share was 81 cents. Okay, so I will also post a picture right here where you guys can see, where it shows you and how to find how much dividends each stock may pay, or which ones do pay. So just on your apps or the TD app that I personally use. Okay, so it's basically they pay you out their profits throughout the year. If the company does well, they're gonna pay you out, and they will increase their dividends as well. Okay, so let's just break it down a little bit more. So if you look at this, dividend yield displayed as a percentage or dollar value within your certain apps, or even online. If you Google any stock, or like AT&T, which is my second favorite, you'll see how much they pay out as well. All right, so sometimes they'll give you a number like $2.08. That's for the entire year. Okay, so that $2.08 you might divide it by 4 to get it for each quarter, or even if you want it monthly, you can do that as well. But it just depends when the company decides to pay you out. Okay, and so mature companies like to pay dividends, as it says, right? And they're mainly utility companies, big companies that are stable in the industry. There's for example, Fcel, APXT, those are just coming up companies. They're definitely not going to have any dividend payouts or nothing. So remember, stable companies that's been in the game for a long time. Pepsi, Coca-Cola, AT&T, Enbridge. There's a company called I forgot what it stands for, that pays a very good dividends as well. And then there are ETFs as well. Okay, so ETF is just like a fund that has multiple stocks underneath it. And if you buy that fund, you kind of acquire those stocks as well within it, and they pay you out dividends. So those are some good as well. And one of them I think is called VYM, Vanguard something. I have it written down maybe. I'll post I'll show you guys with the picture as well. I'll post it up right here, okay? So those are very good companies to kind of have in your portfolio to build out your dividends portfolio. All right, guys. So now I'm just gonna break it quickly down for you and show you how dividends kind of work, in the sense if you wanted to collect $100 a month from a dividend stock. So this is my little dividend calculator, and I'm gonna kind of show you how to go through it. All right. So there's 12 months within a year, correct? And on average, you're gonna need $100 from your current stock. So we'll use Enbridge as our prime example, okay? So Enbridge is currently trading at $45, and the dividend payout for each quarter is 84 cents, okay? So yearly payout, to calculate that, Enbridge will be paying us $3.36 for the entire year, all right? So to get $100 monthly, we're gonna take $1,200, because $1,200, right? And divide it by the yearly payout, which is $3.36, to get the amount of shares to give you $100 a month, okay? So in order to get $100 a month from Enbridge, you would need 357 shares, okay, of this current stock. So how much does that equate to? You can take 357, multiply it by 45, and I don't know the number exactly, but I think it's roughly 16K. But if I do the math, 357 times 45, so yep, that's 16K and $65. So that's how much you would need to invest in the stock to earn you $100 per month. So this number may seem like a large number for a lot of people, but think about it, it's not. If your stock is compounding in the sense that all this, like the dividends that is paying you out, which is $1,200 essentially for the entire year, right? Times that by even like 2 years, 3 years, so forth. The compound growth is insane, and it's just money just sitting there and working for you at the end of the day, right? So imagine having 5 stocks that pay you out $100 each month. So for a total of $500 each month. Imagine that you're just sitting and collecting the $500, and that starts to compound together. So we'll take an example, 500 times 12, which is roughly, I think, 75 or 7 grand, whatever. So I don't even know what it is. Super bad at math, even though I trade a lot. So $6,000, okay, for the year. So $6,000 for the year, which will get reinvested into the same stocks if you have DRIP set up. So a dividend reinvestment plan, okay? You basically do, the way to set that up is you call your broker, whoever it may be, and tell them that you want all the dividends to go back into the same stocks. So they start compounding, growing each year after year. And it's just a snowball effect. Once you get the ball rolling, it's just gonna get bigger and bigger and bigger until you know it, you're gonna be having $2,000 to $3,000 a month coming in from doing nothing, right? And then if you, and imagine if 2,000 to 3,000 is compounding together. So you can just imagine how quickly your portfolio is gonna grow from 100K, for example, to 200K. It's insane. So definitely it's good to start investing in dividends and growing out your portfolio. And I will be starting a series as well on how to just start from nothing basically and kind of start building your dividends portfolio out. I did have one before. I actually recently ended up selling it, stupid reason, but I did get out, and now I'm gonna reapply my whole tactics, my whole plan, and build my dividends portfolio out and show you how it can grow over time. And yeah, and you guys can join me on the journey as well. All right, guys. So I hope this made sense. It's very easy to understand, in my opinion. I tried my best to break it down in the most simplest form. Just look for a stock that pays decent dividends. Take advantage of them. Like what? A month, if you wanted to just put like $100 away, that's 2 shares of this stock, right? So it's definitely worth it. 357 is not a large number, guys. Just save on a regular basis, and this number will automatically start growing. All right, the sooner you start, the better it is. Okay, guys. And just before we end off this video, I just want to quickly show you guys the stock that we're investing in, or invested already in. Well, I am. They're invested in with me, but it's in a buying opportunity right now. They just had their earnings today, if we look at it, and I don't think the report is coming out around 10 a.m. So not sure how they're gonna do, but they're not obviously gonna do well because they're still a baby company and they're still growing. But look at this. So it's definitely in my buying zone. So right now, yesterday closed at $16.76, and today it's at $15.77. You ideally want to catch this, I would say around 15, 1 second, what is this line? So it's actually in a very good buy zone. I'm going to take advantage of this for sure. So buy it around 1550 or below. That'd be ideal. See how the market plays out today, and based on that, take your opportunity. I'm going to be picking up a couple hundred shares at 1550 ideally. I want them at 1550. So that's where I'll be picking them up, and yeah, and we'll ride the next wave up, guys. So keep this on your watch list and just prepare to pounce on it, all right? Because it is in a buying zone and it will retest all-time highs, which is $20. I guarantee it, right? Well, I don't guarantee it because I don't know, I can't predict the future, but I feel like it will go back to 20 and retest its all-time highs. All right, so just with further ado, if you guys found anything useful in this video, and if you guys think I can improve on anything, please leave it in the comment section below. And if you like this video, please leave it a big fat thumbs up, as it really helps me out. Reason for the thumbs up is, I'll even tell you guys, is for YouTube algorithm. The more likes you get, the more people can find your video. Simple as that, right? That's why a lot of YouTubers kind of say, give me a thumbs up, guys. And yep, so if you found anything useful, please subscribe, as it greatly helps me out, and we'll grow our family together. All right, guys? So any questions, leave them in the comment. Till further notice, peace.